I can even tell you a little bit about like, just kind of when I joined Pantera 2014 and how it's kind of progressed all the way until now. I mean,
Sure.
it's been crazy. I mean, my background is mostly in VC. I mean, I've been in a VC now for 9 years, and so that's kind of what I brought to Pantera, kind of like the hedge fund experience with Dan. You got Joey with the operational technical experience, and myself with the VC experience. So when it was 2014, I mean, when I joined Pantera, I think there's only 10 companies in the space. I could list them all on a piece of paper. And I was like, all right, which ones do you want to hit up right now? And, it grew quite a bit in 2015. We started seeing a lot of exchanges, a lot of cross-border companies. And then 2016 was the year of the enterprise where, all these enterprises, Goldman Sachs started making investments, JP Morgan started doing their private blockchain stuff, and things started slowing down a bit, right? There wasn't any sort of consumer traction, whether it is speculation or whether it is store of value. And then 2017 was just, like you mentioned, it was insane. What really brought that on was we had Bitcoin as sort of a store of value and then started off as a way to move money across borders. That was sort of like a big use case for Bitcoin, and still is actually the biggest use case. All cross-border payments are done using Bitcoin versus any other cryptocurrency. I mean, that's where most of the liquidity is at. And 2017, or actually late 2016, was where we started diving deeper into Ethereum, and the ecosystem started growing. A lot of developers started building on it, and the first use case was being able to issue a token to have it function within your product and technology and be able to actually raise capital for your open source project from not only private investors, but retail and community investors. And that's a great way to give skin in the game or give value of your project to early adopters and have them go out there and promote and sell your product and your company. And that just turned into wild mania. 2017, I mean,
Liquid venture capital.
Yeah. And I think on top of just like the liquidity part, but it was the global part too. Any retail investor could be investing into any project all over the world. So traditional venture capital, it's all about like companies looking a certain way, companies being built in certain locations. Now anybody could be raising capital from anybody around the world, and there was less limitations. You didn't have to be accredited. And on top of that, you can get liquidity almost like the next week. So you put that all together, like over 20 billion has gone into this space. A lot of it went in on 2017, and we're seeing projects go out there, hit the market, and raise their private sale, raise their crowd sale, and a week later they're already up 5, 10, 20x. I've seen some like within a span of weeks hit 100x in terms of return, right?
Insane.
It's insane.
Yeah.
I still remember like we did a sale, or we participated in a sale, and it was up 3x, and we were just so disappointed, right?
Yeah.
I mean, we're just like 3x,
triple my money.
Triple my money. Like this is not great. I mean, compared to the norm, but
the government came in and started hovering.
Exactly. So what happened in late 2017 and early 2018 was the government started sniffing around. The SEC started cracking down on some really obvious scams. I think it's the combination of the taxes to the SEC stuff, which also, and then basically investors getting smarter. And then I think the fourth thing is the exchanges themselves. They're being targeted by regulations because those guys are the gatekeepers in terms of who gets to access these cryptocurrencies, right? And which cryptocurrencies are being offered to investors. And so once exchanges started to slow down the listing of tokens, that in combination with projects like actually like putting up lockups and vesting schedules. So, one of the big things that you mentioned that was really appealing about this space to investors was to be able to make money, but in a quick way, right? Generating high IRRs. And once that became gone and there was a lot more requirements and a lot of regulatory uncertainty, a lot of the scam projects started to back away. And what we saw in 2018 was prices dropping, people are selling, uncertainty around the space, and then capital just starting to back away.
As someone who is in the space and is probably the most venerated firm in crypto, did you guys know it was just so much shit at the time, or was it just like, oh my God, the capital's coming in, if we don't participate, we're gonna underperform? Like, was there a little bit of both of those?
Yeah, there was definitely pressure to deploy capital into exciting projects, and knowing that there was liquidity there, you can, really just kind of act more like a hedge fund a bit, right? But nevertheless, I mean, we had a ton of capital that was coming in, and we wanted to make sure that we were getting it out there and helping our company succeed and really just taking advantage of this momentum. Nevertheless, I mean, we've been long-term investors in this. I come from more of a VC background, so every single project that I invest into, I want to try to help them maximize their potential. Obviously some projects aren't going to get there, and then you kind of like take a step back and you recalibrate and go into projects. But yeah, there was definitely a lot of pressure to really go out there and hunt for these deals. And it's tough because at the time there was just a ton of capital. Capital was a commodity, right? And I think for us, I mean, being Pantera and sort of having that reputation, having all that value add that you can kind of bring to projects, we always had the opportunity to participate at least in some way, but the clock was ticking because every project had so much available capital that they'd rather not spend a lot of time on fundraising. So sometimes we get projects and we would have like 2 or 3 days to make a decision, and if not, we lose our spot, right? And that's not great because as an investor, it's hard to do great diligence in 2 or 3 days and make sure that you are sort of covering all your bases. And so a lot of times, like, you really had to just work really, really hard to kind of get these deals done. And you're right, there's a ton of noise out there. I mean, we were getting like maybe 60 or 70 white papers a week.
Oh, geez.
Yeah. And so
just the pure supply of it probably.
Just the pure supply of it. And you know how you get your best deals mostly from referrals? I mean, I think that's where that channel really mattered more than anything else. I mean, a lot of the cold emails, we'd look at everything, but we would really prioritize papers that were coming from, really strong referrals and really strong connections because you just can't go through like that type of volume.
Yeah, especially with 5-10 people at the time, probably.
Exactly, and like only 3 or 4 guys on the investment team, and just focusing on investments, but then also trying to like help your companies too. And so to be able to do all of that, I mean, it was really tough.
And since it's calmed down, the one message that you guys have had throughout this whole time is we might be in the first inning of a 9-inning game, and you guys have been there consistently saying this is a long-term investment. Can you talk about your competition? Like, what happened to all the capital that was fast? Are those funds now just under? And are there more giant institutional funds coming up to the plate where, like, you have Fidelity, I believe, is starting a crypto fund. There's a lot of giant mega financial managers getting in the space. Can you talk about that a little bit?
Yeah, so you're right. I mean, in 2017, we saw a lot of capital that was looking to make a lot of quick money in this space. And a lot of it was coming from Asia, but actually a lot of it was in the States too and all around the world. But, definitely a high proportion of them were in Asia. And once 2018 hit and, liquidity went away and, the ability to more easily make money in a short amount of time just kind of went away, a lot of those funds have just pulled back and shut down. And that plus, like, when the market's down like that, I mean, a lot of their positions were in Bitcoin and Ethereum and other tokens. And, their LPs are not institutional, and so they're not going to be, sort of backing them up and those sort of things. So, a lot of those funds have gone away, and the ones that have survived are funds, funds like Pantera that have been doing this for a long time. And I think the great thing that we've done is we've continued to be very transparent, not only with our LPs, but with the community. And we try to educate the market on what is going on. I think the first thing that we educate them on is, we are stewards of your capital, and we've been doing this since 2013. We've seen Bitcoin go up to 1,300. We've seen it go down to $139, where everybody was pinging saying, hey man, like, I told you not to look at this Bitcoin thing. Yeah. It's going down to zero. Like, you should.
Is that your indicator to just kind of scoop some, knowing Dan's background as a trader, right?
So for us, like, we've seen these cycles, and these cycles don't phase us. We know what to do in every single one of these cycles, and that's continue to invest, good prices to get in, good valuations to get in. This is a time when most of the building is going to be done. This is a time where, like, the best companies are going to come out of, and that's kind of how we see it. So this is great. Like, the competition is sort of like moving away, and we're going out there and we're getting the best prices, getting into the best companies. But you're right that the best thing about 2017 was it brought a lot of awareness about the space, in a good and a bad way. The bad way is, my mom during Thanksgiving in 2017 was like, "Hey, I heard about
Oh, no.
all these ICOs. Like my friends are telling me to get into it." And I was
Yeah.
like, "Mom, stay away, stay
You're like,
away."
"Sell,
This is-
sell."
this is definitely at the peak of the hype, and
Yeah.
and so basically, it's gotten a lot of attention to institutions, and that means that great entrepreneurs that are trying to create infrastructure to help institutions get into the space. It also means that institutions are thinking about ways to participate, whether that means like starting to think about how do we hedge and trade derivatives, to maybe even setting up funds to be able to participate in this, or maybe investing into funds. Institutions, endowments, fund of funds are now looking at Pantera and other folks, and that means other experienced investors are also starting to branch off. I mean, we've already seen some other folks leaving some of the top VC funds to start their own crypto-focused funds, and so we're seeing sort of the institutionalization of the fund space too, which is great. You're gonna ask me, your next question is like, how do we differentiate from all these new guys? Maybe, I think for us, I mean, it's
In my mind.
I know. It's the track record. We've done this before. It's the network, and being able to provide more resources than anybody else. Whether it's Dan's background in institutional finance, to Joey's operational and technical background, to my connections, doing VC for the last 9 years, especially in this space where I think compared to any other U.S. fund, Pantera has invested quite a bit outside the United States. 30% of our investments are outside the United States. So that means that we're looking at geographies where we think distributed ledger technology and cryptocurrencies make a lot of sense. And therefore, we're building up really deep connections in all of these different communities. And what that means is we can provide a lot of value add when companies want to scale their teams globally, or want to market globally, or want to get liquidity, which again, most of the top exchanges are outside the United States. All the exchanges doing IEOs are out of the United States. So, those global connections are really helping us stand out from all the rest of the firms that are based in Silicon Valley.